Good morning, students. Welcome back after a short gap on account of so many festivals, on account of our 79th Independence Day. But I'm sure you would have utilized this short gap with a lot of discipline and definitely would have come back with many inputs, many questions, and also you would have by now understood the approach of studying this paper of CA Final Indirect Tax. So welcome back, students, and a very, very good morning to you all. Let us start with our topic at hand. Again, as a set custom, I'll first take up your queries, questions. We'll discuss on them, and then I'll take up the revision, and then we'll go back to the topic. So let me first hear you out. So let me know what are your queries till now relating to this topic in particular and GST in general. Yes, anybody? Any of your queries on this topic or in general GST? No query, students? So then should I start with my own deliberation? So we are in the topic of place of supply. So basically, place of supply is one of the pillars of GST law. We have designed this GST law on the criteria of value-added tax, on the criteria of free flow of input tax credit, thereby reducing cascading effect, on the criteria of destination-based tax as against the origin-based tax, which was there in the previous laws, and on the criteria of that GST has to be completely system-driven. Now, with all these parameters in mind, the role of place of supply becomes very important, specifically to ensure that one, the consumption state, the destination state should get the tax revenue of the S portion. Two, to ensure that, now this second point is very important, to ensure that there is a smooth flow of ITC, there is a proper mechanism whereby the recipient gets the credit of all the eligible business purchases, business inputs. And this is one of the most, I'll say, primary purposes of designing the place of supply in this particular manner, what we are studying. So basically, place of supply is a different way of talking about the destination based consumption tax concept. So since we want to levy tax in such a fashion that the revenue should go to the consumption state, we have designed the place of supply provisions in chapter number 5 of the IGST Act. So all other chapters are majorly relating to CGST, SGST provision. This chapter exclusively is IGST. These provisions are contained in 4 different sections: 10, 11 for place of supply of goods transactions, 12, 13 for place of supply of service transactions. Within 10, 11, 10 for domestic transactions, 11 for import-export transactions of goods, 12 for domestic transaction of service, and 13 for international transaction of service. Now, students, what is very important to appreciate is that when it comes to international transaction, we are bound by different international principles, different international jurisprudence, which guides the concept of destination. So, for the international transactions, we are, you can say, replicating, or we are following and adapting to the international guidelines relating to place of supply, which exist in the European VAT, which exist in the different other indirect tax regimes across the world. Now, importantly, when it comes to domestic transactions, be it of goods, be it of service, our focus is more on ensuring that the recipient should get the ITC wherever the recipient is the B2B business recipient. In short, where the recipient is registered and recipient is going to consume this for the purpose of business where ITC is available. So, keeping in mind this, that I want to allow the recipient to get the ITC, I have designed the place of supply provisions. But this principle that recipient should get ITC is possible only where the recipient is registered and the inputs purchases which the recipient is getting are eligible inputs for ITC. Where both these things or one of these things are missing. One, the recipient is an unregistered recipient, or two, the ITC or the inputs which the recipient gets is not eligible for ITC, like you can say the blocked credits. You will find that in such cases, the place of supply provisions may slightly deviate from the recipient to the physical place of consumption of those services. So, in short, if I have to give you one underlining principle of all these place of supply provisions, specifically with respect to domestic transactions, the underlying principle is that wherever recipient is registered and the ITC or the inputs, I should say, are eligible for ITC, the place of supply should be the recipient. However, where either the recipient is unregistered or the ITC is such that the law does not allows you to take those ITC because they are blocked under GST law. In such cases, you will find that the place of supply may be recipient, or mainly it is the physical consumption place. Now, since this is the underlying principle, you understand, once you understand, you will be able to understand, appreciate, and remember the logics of different place of supply provisions, which otherwise may slightly appear confusing. That at one place they are saying recipient is the place of destination, that is place of supply, whereas in some other case they are saying destination or the place of supply is the place where actually the services are performed. So this differentiation, why? The reason is what I just mentioned. So with this background, with this thought process, you have to read the entire provisions of place of supply. Now, place of supply has these some important definitions, which if you remember, we had discussed in detail. Most importantly, the definition relating to location of supplier of service or recipient of service. There is no definition in the GST law for location of supplier or recipient of goods, because the law presupposes that this is most obvious and it can be identified physically. But for services, since this may be difficult because of the non-tangible, non-physical nature of services, hence the law thought it relevant, thought it uh, you'll say important that they define location of supplier or recipient of service. When you discuss and understand this location, you find that the recipient's location or the supplier's location is defined on similar lines, and it is directly linked with the place of your business. Importantly, in relation to service, it is very difficult to identify from where exactly services are provided or where exactly services are received. This is difficult, at times maybe impossible. Hence, in order to define location of supplier of service or recipient of service, the law has not linked it with the provision or receipt of services, but it has linked it with the place or location of your business. Again, keep this principle in mind to understand the provisions relating to location of supplier of services or recipient of services. So basically, how they have defined location, according to them, it is firstly, if your business is registered, the registered place. So where you have taken registration, that becomes your location, irrespective of where exactly physically the services are being performed or executed. That is not the location. Location is your business place registered. Second, if multiple business places are registered, then they have said that it is up to you to decide which is the directly connected registration. So if you have 5 registrations in 5 different states, you have that liberty to put one of the registrations in your contracts as the registration directly connected, and we will accept that, and that will be considered as the location of supplier or recipient. Interestingly, where you are not registered but still having a location of business, which is over here referred to as fixed establishment. Then they say that if you have a fixed establishment, which according to me in very plain words is your actual business place. Again, the law says the place or the location of supplier or recipient of services will be this unregistered place of business, that is the fixed establishment. So if you observe in all these 3 points, their intent is to take your business place as your location of supplier or recipient. And then in the fourth point, they go a step forward to even accept that there is a possibility that you are doing business, but you are not having any business place. Then in that case, they say your usual place of residence, which is obviously your home or the place where you are staying on a regular basis. So a rented apartment, maybe even a hostel can be your usual place of residence, and this would be the location of supplier or recipient of service. Now coming to the provisions, when we go to section 10, which is the place of supply provisions with respect to goods and with respect to domestic transaction of goods. Here they have identified as on date, you can say 5 different situations, 6 different situations if I have to be more precise, and they have given the place of supply for all these 6 different place of locations. What are they? Section 10.1, clause A, B deal with place of supply where there is a movement. CA, you can say, deals with place of supply where there is no movement. And D&E deals with a very specific case scenario. So this is how they have given 6 place of supply provisions for 6 different case scenarios. Now, Between A and B clauses, the difference is where there are only two persons in the transaction, then the place of supply as per clause A is the location of recipient. Simple words. Though the language used over there is it is the location of goods at the time at which moment terminates for delivery to recipient. So this is use of multiple phrases in one language. However, if you link it with different other provisions, definitions in the act, and if you also read it with the newly amended clause CA, newly introduced clause CA, you find that somewhere the intention is that the recipient's location, or I'll say the location of delivery, which is mentioned on the invoice, the recipient's address, which is mentioned on the invoice, shall be treated as the place of supply. So where it is registered, you can say under clause A, it is covered. Where it is not registered, clause CA is covered. Now, please understand, clause A nowhere refers to that it should be registered, the recipient should be registered. But after reading clause CA, we can, on the basis of principle of constructive interpretation, say that clause A is intentfully designed to cover registered recipient scenario and CA for unregistered recipient scenarios. In both cases, the place of supply is the address of the recipient mentioned on your invoice. Simple. Then comes B. Clause B deals with a scenario where there are three parties involved: the seller, the buyer, and the third party where delivery or dispatch is to be made. So buyer is my bill to party. This third party is the ship to party. I'd also mentioned that first reading of clause B gives you a wrong or a different interpretation, because in clause B in the language, the buyer is referred to as a third person. Though in our common parlance, we will refer to this ship to party or the delivery address as the third person. But here in the language, they have referred to the buyer as the third person. So this is where slightly the clause becomes tricky in the first interpretation. But if you read it with this clear thought process that they are referring to the buyer as third person, you will understand it clearly. Now, clause B gives a different answer than clause A. So clause A or clause CA were indirectly hinting at the address of delivery of the recipient as place of supply. But clause B says it is the bill to address and not the delivery address, which is place of supply. So in bill to ship to transaction, which is covered in clause B, where more than two parties are involved in the same transaction, the place of supply is not the delivery location. It is not the place where the goods will be shipped. Rather, it is the location of the buyer, that is the bill to address. Then clause C deals with scenarios where transactions happen on as is where is basis. So you are supplying goods without movement. In this case, clause C says the place of supply where the goods are not intended to be delivered anywhere. They are to be handed over at the place where they are at the time of supply transaction. The location will be the location of the goods where they are. So since there will be no movement, the place of supply here is the location of the goods. Then comes clause D, which deals with a very pinpointed specific case scenario, that is where goods are to be assembled or installed. And this is one of the requirements of the contract, that when I'm supplying the goods will be assembled, installed at a particular place. In such scenarios, clause D says place of supply would be the place of assembly or installation. And then comes clause E, which deals with a unique scenario that while you are in travel, while you are on board any conveyance, which may be a train, a plane, a ship, in such cases, what would be the place of supply of goods which are supplied to you on board this plane, train, or ship? For such scenarios, they have said the place of supply would be the place where these goods were taken on board that plane, on board that train, or on board that vehicle or vessel. So here the place of supply is a very artificial deeming concept. It is not your actual real place of consumption because that is impossible to identify. So this is how section 10(1) defines place of supply for different case scenarios. Anybody wants to add anything? Anybody wants to discuss anything? I keep it open. Students, any inputs, any questions, any specific para when you read this, you did not understand or there was something confusing? No? Then you come to section 11, which is place of supply of goods when the transaction is of import or export. Now, very important is the definition of import export. Import is defined to mean bringing the goods from a place outside India to India. So it has to be a physical entry in India. Similarly, export is defined to mean taking the goods from India to a place outside India. So again, physical movement crossing our boundaries is what is envisaged in both the definitions. Now, the place of supply for these two scenarios is very simple and straightforward. So for import, it shall be the location of the importer and not the location of import. Because again, if you take location of import, which need not or may not be your own state in which you are registered, then there will be a challenge that you may not get the ITC. Hence, keeping that perspective in mind, which I also mentioned at the start, they have intentfully taken the location of importer as the place of supply so that whatever IGST you are paying on import of goods at the time of custom clearance, that IGST would be available to you as credit. So if you remember, I had mentioned this, that the intention of all the domestic transaction place of supply is to give you ITC. Hence, the language, the provisions are so curated that the buyer gets ITC wherever it is available. If you keep this in mind, understanding these provisions will be very simple. In case of export transaction, they are saying that the place of supply would be the location which is outside India. So that is how section 11 very simply, very concisely defines place of supply. Then you come to place of supply with relation to service transactions. Here, you have to first identify whether your transactions would be falling in section 12 provisions of place of supply or section 13 provisions of place of supply. Now, how to identify this? We casually are using this term that 12 is for domestic transaction, 13 is for international transactions, but I have used the word we are using it casually. Casually means law has nowhere used these terms. What terms law has used, we have to understand. Law says where the location of supplier and recipient both are in India, you will check section 12 for place of supply. Where any one of the location is outside India, you will check section 13 for place of supply. So we are casually using the term domestic transaction, international transaction, to basically cover these two situations. Now, another important point to be kept in mind and observe is that for goods, we had very specifically said that wherever there is import export of goods, apply section 11. If not, apply section 12. Here, they have not used the term import export of service. Why? Because the definition of import export of service requires different conditions to be present, and one of the conditions is relating to place of supply. It means a transaction may be international. Why international? Because one party is in India, one party is outside India. So the transaction may be international, still may not be an import or export of service transaction. Why? Because simply because one of the parties is outside India, one of the parties is in India, will not make the transaction, which is actually an international transaction. There may be flow of foreign currency also, but still this is not sufficient to make the transaction an import of service or export of service transaction in the eyes of law. Why? Because there is a specific requirement to be fulfilled. In case of import, the requirement is only three, that supplier is outside, recipient is inside, and the third most important requirement, place of supply is in India. When it comes to export of service, the requirements are even more. Supplier is inside, recipient is outside, place of supply is outside India. And then further requirements are foreign currency related requirement, and one more requirement that the outside recipient should not be our own branch. Only when all these requirements are satisfied, the transaction becomes import export of service. And in this, the most important requirement is of place of supply. Now, since place of supply will decide whether the transaction is import export, hence section 12, section 13 cannot start with that 12 will apply when it is not import export and 13 will apply when it is import export, like how you found in case of goods. 10 and 11 specifically use the terms import export for deciding their applicability. 12 and 13 are not using these terms because we have to still define, we have to still identify if your transaction is import or export. So for identifying that, we have to first find out place of supply. Hence, these place of supply provisions will be, one second, I'll just plug in the charger. So the import or export of services is yet to be identified, and it is basis whether it is the place of supplies in India or outside India. Hence, still, since the place of supply is the deciding factor, we have not yet identified whether the transaction is import export of service, and hence it is not possible to decide the applicability of section 12 or 13 basis import export. Hence 12 and 13 are designed basis only where the location of supplier and recipient is. So to conclude, what I mean to say, if you read 10 and 11, which is for place of supply of goods, they are basis whether the transaction is import export or otherwise. 12 and 13, both these, which is dealing with place of supply of service, are basis where out of the two parties, one of the location is inside India, one is outside, then 13. If both are inside, then section 12. And then after reading 12 and 13, you may come to the conclusion that this is import or this is export. So import export will be after applying 12 and 13 provisions. Hence, to apply 12 and 13, our criteria is not whether the transaction is already import export, because that is not yet identified. Our criteria is where the location of both the parties is. So it is very much possible that even though the location of both the parties is such that one is in India, one is outside India, still it is possible that your transaction may not be import or export, because the place of supply is not as per the requirements of both these definitions. Now, Section 12 determines the place of supply for services where both the locations of supply and recipient is in India. Importantly, here the service may be provided outside India. That is okay. Still, it will fall in Section 12 only. Now, subsection 1 simply identifies when Section 12 is applicable, when both the locations are in India. Now, Section 12.2, which is the residuary rule, says that you will decide the place of supply on the basis of subsection 2 only if you are not covered in the specific scenarios given in subsection 3 to subsection 14. So only where your service is not covered in subsection 3, 4, 5, 6 up to 14, then the place of supply will be decided as per subsection 2. I also mentioned in the previous classes that subsection 2 is effectively the clause or the provision to determine chartered accountants service place of supply provisions, because majority of our services what we are providing as a chartered accountant are not covered in subsection 3 to 14. Hence, for us this or recipient's location, the registered address of the recipient will become place of supply. Clause B says, even where your recipient is not a registered person, still subclause 1 prefers the location of recipient only as place of supply if that location, that address is mentioned on the invoice. In case where the location of recipient is not mentioned on the invoice, it is not available on the invoice, then as per subclause 2, the place of supply will be the supplier's location. So if you see the design, you will connect with the point which I mentioned at the start, that for domestic transactions, my intent is to make the recipient location as my place of supply wherever specifically the ITC is available. If not, then I can go to other places, especially the physical place of consumption. However, where ITC is available, my preference would be taking the recipient's location as place of supply. Yes, anybody has any questions in any of these provisions, students? Students, some inputs from your side. I've been speaking now for a stretch of time. I'll require some inputs from your side. Yes, people present. Anybody would like to share something, add something? Yes, Chitra, Swaminathan, Ayush, Geet, Sanjay, Saurav.
No, no, sir, it's very clear, sir.
Okay, but still any specific inputs, Yogesh, Neha, on any of the provisions of place of supply? I expect that you all read the provisions in detail after our classes are concluded, so that if
Clear,
any,
sir.
okay, because there is a possibility that when you're reading the detailed module in any part, in any uh, para, if you have any queries, we can discuss. Okay, now when we come to subsection 3, now from here, specific transactions have started. Now these specific transactions, firstly, subsection 3 relates to those transaction of services where the services are directly in relation to immovable property. So wherever your services are such that they have a direct connection with what? Direct connection with the immovable property. It means the services are either performed on the immovable property, or the services are such which involve the direct use of immovable property for the purpose of provision or for the purpose of consumption of services. The immovable property has a direct involvement. Then the place of supply is covered under this section, where immovable property is only one of the subject matters of service, but there is no direct involvement of immovable property. In that particular case, the place of supply will not be as per subsection 3. Like, as a chartered accountant, I may be doing RERA work relating to some immovable property. So in RERA, there are many compliances to be done, and it is project wise, and the project is the immovable property. But my services with respect to this RERA work will not fall in this clause, because in my services, the subject matter is the immovable property, but neither I am performing any service on the immovable property directly, nor the immovable property is used to provide the service. So immovable property is only the subject matter of my service, but it is not the tool of my service. This is what is the distinguishing factor. So where immovable property has a direct linkage, that without the immovable property, the services cannot be performed, services cannot be consumed, then immovable property may be the place of supply as per subsection 3. So what services are covered? In clause A, they cover services provided by architects, interior decorators, surveyors, engineers, and other experts, or even the estate agents. Any service provided by way of grant of rights to use immovable property, or for carrying out or coordination of construction work. So if you read this, you'll find that in these cases, the immovable property is the direct tool of the service. Yes, when you talk about surveyors or when you talk about architects, the architects are working on something which has a direct implication of the immovable property. Hence, the services of these nature are what are covered in clause A. Similarly, clause B, here the immovable property is the direct tool of providing the service. So it is the service of lodging, accommodation provided in a hotel, in guest house, etc. Again, C is also similar. It is accommodation in any immovable property, and the purpose of this accommodation could be organizing any type of marriage, reception, or other functions. And most important, official, social, cultural, religious, business functions. And then last is a generic one. But even though it appears generic, it has to be with respect of ABC. So services which are ancillary to clause ABC will be covered. And for all this, the place of supply is the location of immovable property itself. Then proviso says where this immovable property is located outside India, again, you will still apply section 12 because both the parties are of India. Maybe the service location is outside, makes no difference. So even if the immovable property is outside, but the supplier and recipient of service are from India, you will still apply this section only. And as per the proviso, the place of supply now is not the location of immovable property. So it is not outside India. It is very much India because the proviso says the place of supply shall be the location of the recipient. Then there is an explanation which covers a very specific scenario. The scenario is that where the immovable property is located in more than one states. So you have one single contract covering multiple locations. In such cases, what will be the place of supply? The answer is simple. The place of supply is each of these locations. Now, the problem will be, but the contract price is one for all the locations. So there is a single contract covering all the locations with single amount. Then this explanation would be required. It says you will apportion the amount in the ratio as per the terms provided in the contract. So contract should provide the terms how this amount is to be apportioned. And if it is not providing, then on some reasonable basis, which may be prescribed, there is some rules which are prescribing it, which we had studied. Then clause 4 subsection 4 again covers a very specific service. What does subsection 4 covers? Yes, Geet, you're right, Bida. So subsection 4 covers the specific service of restaurant, catering, personal grooming, fitness, beauty treatment, health service, cosmetic, plastic surgery. Now, interestingly, for these services, they are not saying the place of supply is location of recipient. They are simply saying it is the place where services are performed. Now, the question is why here they are not following our golden rule that you should take recipient location as place of supply. The answer is if you observe this list and if you read section 17.5, which is the ITC blocking section, section 17.5, you will find that in 17.5b, all these services are covered. So in short, 17.5b blocks the ITC of exactly these same services. If you read 17.5b, you'll find a direct reference of these services. Now, since 17.5b is blocking the ITC of these services, hence the place of supply need not be now recipient because anyways the recipient is not going to get credit because of 17.5b. Hence, the lawmakers have now taken the physical location of these services as the place of supply. Then, where it comes to training and appraisal service, subsection 5 says where recipient registered his location, if not registered, then place of performance. Subsection 6 deals with the service of entry into any event, any function, any amusement park. It is the place of the event. Again, why? Because these are generally personal services, generally. If you see the nature of events, it is mainly personal entertainment and amusement type of events. And hence, since it is not a business event, they have taken the place of supply as the place where the event is held. So you may still not get the credit if you are from a different state. Subsection 7 deals with the service of organizing an event. Now, this service will be required by a businessman who is organizing the event. Hence, they have gone back to the principle of recipient. So, what they are saying, where the service is what? It is by way of organizing any event which may be cultural, artistic, sport, educational, entertainment, etc., including supply of services which is in relation to conference, fair, exhibition, or similar events, or services ancillary to organization of any of these events, or services referred to in clause A, or assigning of sponsorship to such events. For such all services, what will be the place of supply? So the place of supply is again going to the general rule. It is the registered person's location. And if the person is not registered, then the place where the event is held. Again, the same explanation which was there for immobile, that wherever you are saying the location of event is the place of supply, and let us say there is a single contract covering multiple locations, then how to apportion the value? Again, value will be apportioned as per the terms of contract. If not, again in terms of the rules which are provided. Subsection 8, it covers place of supply of service of GTA. So where there is transportation of goods, including mails or courier, what is the place of supply? If the recipient is registered, recipient's location. If recipient is unregistered, then the place from where the transport has started. Now here they have used some different language. I'm giving you the practical implication of this. So they are saying location at which goods are handed over. I will say the place from where the transport has started, because that is the place where you hand over the goods to the transporter for their transportation. Then, in relation to passenger transport service, the provisions are similar to GTA service. What is it? If recipient is registered, recipient's location. If not, again the place from where the transportation starts, that is where the passenger gets onto the conveyance. So it is the place of starting of the transportation. Again, provided where the right to passage is given for future use and the point of embarkation is not known, the place of supply shall be determined as per the generic rule in subsection 2, where the journey is on both sides and you have in one ticket book both side journey, the treatment will be that both the journeys should be treated as separate. Subsection 10 deals with place of supply where services are provided on board the conveyance. Now, this is very similar to what we studied in section 10(1)(e). Over there, goods were supplied on board the conveyance. Here, services are supplied, but the place of supply provisions are very different. Where services are supplied on board the event, they are not applying what was given for goods, because for goods, you are loading the goods on the plane. Here, services, there may be or may not be any loading of goods. Hence, here they are saying the place of supply shall be location of the first scheduled point of departure of that conveyance for the journey. So, from the place where your journey has started, whatever is the first point of departure, that will be considered as the place of supply of all services provided during the entire journey. Then for all telecom related services, which may include your mobile services, internet services, data services, all these services, place of supply depends upon whether your telecom lines are fixed or they are mobile. If your telecom lines are fixed, like you have installed the router at a place, you have put some cables for the internet services or telephone services, or for your this DTH services, you have put the that DTH receptive umbrella. In such cases, the place of supply is the place where these physical devices are installed. That will be the place of supply. However, where the service are by way of any mobile connection, in that case, if it is postpaid, it is the billing address. If it is not postpaid, in that particular case, the place of supply would be if you are buying the talk time or the vouchers through some shop, that is through some selling agent, the address of the selling agent or the shop is the place of supply. By any person to the final subscriber be the location where such prepayment is received. So basically, it is talking about the shop only. And in case where there is no such shop, like how we are today doing this online, then it will be the address of recipient as per the records. And where such address is not available, the place of supply will be location of the supplier. So wherever address of the recipient is not available, the location of supplier shall be the place of supply. Again, explanation says where the lease line is between more than one state. So let us say it is crossing from one state to another. Again, the value will be a portion as per the contract, and if not, as per the basis provided in the rules. Subsection 12, place of supply for banking financial services. Again, going to the generic rule, where the location of recipient is available on the records, the location of the recipient. If not, then location of supplier. Subsection 13, insurance services. Here, whether you are registered or even where you are unregistered, in both cases, the place of supply is the location of recipient. And again, if by chance recipient location is not available, then it would be the supplier's location. Otherwise, it is always the recipient's location. And in case of insurance, it will be recipient only because that is available. And then you have subsection 14 for place of supply of advertisement services, but here advertisement is specifically for the government. So it may be a hoarding put, it may be some wall is painted somewhere, it may be distribution of some pamphlets, brochure, or it may be even on radio or television. So for any of these services, what will be the place of supply? They are saying it is the place where this information is disseminated. So place where in short this advertisement is being displayed, or if it is on television, it is aired. So wherever this advertisement is being disseminated, that place will be the place of supply. And how to determine it? If you remember, we had discussed a very interesting rule that where it is through hoardings, where it will be, where it is through radio or television, where it will be. Then we saw that it will be on the basis of viewership, etc. Right? Yes, where it is on train, correct, Geet. Again, you have different rules. If the advertisement is put on train, how to identify the location, etc. So these are domestic place of supply provisions for services. You should go through all these examples as you can see in these 42, 43, 44, all these examples which are given below each of these service provisions are very important from exam point of view. You should read, understand all of these so that if any question, the case study in the exam is designed on similar lines, it will be easier for you to understand and even answer it correctly. Now we come to section 13, which is the place of supply provisions, where in case of provision of service, either the location of supplier or the location of recipient is outside. So where the supplier's or recipient's location is outside India, you come to section 13 for determining place of supply provisions. Here, you will find that some of the provisions are quite different from what we studied in section 12, which is for domestic transactions. The reason is very obvious. The reason is that since here we are going to deal with international transactions, we are bound by certain common international guidelines that we need to apply, that we need to follow. So our place of supply provisions under section 13 are different than 12, even though both are dealing with services, for the reason that for 12, our intention was, again, if I repeat, to give ITC to the recipient wherever available. But in 13, our intention is to match with the international guidelines. And hence here, the place of supply is designed matching the international guidelines. That is why you'll find it slightly different than what we studied in 12, even though the scenarios are very simple. Sorry, not simple. The scenarios are same to section 12, but still the answers are different. Now, starting with subsection 1, it is a generic point. It simply says when this section will apply. Then coming to subsection 2, which we had discussed in the previous class. So section 13, subsection 2, which is again the default provision or the residuary provision. Here, how they have defined place of supply. If you remember in section 12, wherever they were talking about recipient, there was a generic, you'll say a flow that they were classifying it as whether the recipient is registered, whether the recipient is unregistered, and accordingly, place of supply provisions were given. However, you will not find this point anywhere in section 13. That is, no provision in section 13 is dependent upon where the recipient is registered, where the recipient is unregistered. Why? Because in case of section 13, we are talking about transaction where one of the parties is outside India. And if the party is outside India, there is no possibility that the party would be registered in India. Since this possibility is not there, because we are talking about an outside party, outside India party, hence, nowhere in entire section 13 you will find the reference of the term registered, because there is no possibility that the foreign party would be registered in India. Hence, nowhere in section 13 our reference will be to registered recipients. But still, 13 tries to make the recipient's place as place of supply wherever possible. So even in the default rule, they have tried to keep recipient's place as the priority for place of supply. So what it says, this provision provides that the place of supply is the location of recipient. Now here they are not using the word registered because as I already explained, that may not be possible. Now in this case, what they are saying, our preference is to take location of recipient as place of supply, because again we want to make it recipient based provision. However, if again practically the location of recipient is not available, so you do not know the location of recipient or you do not have a proof to evidence what is the exact location, in that case that we are left with no choice but to take the location of supplier of service as the place of supply. So wherever location of recipient is available, we are saying we take location of recipient only. If not, we will take location of supplier. Now, importantly, this is our residuary rule. This rule is not applicable wherever you are given any specific transaction, as we are going to study in the further subsections 3 to 3 onwards. Subsection 3 onwards, you have so many subsections. Here I'll take a small break. We rejoin in 6-7 minutes. So around 8:05 we rejoin so that we can discuss in detail each of these specific place of supply provision for services. Fine. So let us rejoin at 8:05. service provisions. 13.3 deals with performance-based services. Now here, if you see the language, let us go to the language of the law. I'll do one thing. I'll open this sheet twice so that in one sheet we'll read the bare provisions and in one sheet we'll go through the detailings. Now, where does subsection 3 applies? If you see the language, what it says. Firstly, it says, in case of following services, place of supply shall be the location where the services are performed. So they are going by the physical location. Again, keep in mind, we are dealing with international transactions and the provisions here are based on international guidelines. Hence, here you may not find everywhere recipient being the place of supply. Now, what are these services? They are saying first, clause A covers services supplied in respect of goods which are required to be physically made available by the recipient of service and where it has to be made available to the supplier of service. So, in other words, your services are such one, the services are to be performed on the goods like repairing of goods, like doing some job working of goods, like doing some polishing, finishing of goods. So all these are the services, the processes which are to be performed in respect of the goods. And since they are to be performed on the goods have to be made physically available to the supplier. So this part itself gives you a hint as to what type of services they are referring to. So the services are such that the goods on which these services would be performed have to be physically with the supplier. And in this particular case, if the goods are not provided, the provision of service itself will not be possible. So for such type of services, the place of supply would be the place where these processes, these activities are being carried out on the goods. So this is the first part. Now these has two provisos. The first proviso, which was already there originally in the provision, is relating to the case where the services are provided from a remote location. And how they are provided? They are provided by electronic means. In such case, the place of supply shall be the location where the goods are situated at the time of supply. Now here, the possibility is why they have carved out this exception. Here, the exception is carved out because maybe the goods need not be physically delivered to supplier. Why? Because the services are such that they can be performed from a remote location. And interestingly, the word uses by way of electronic means. So what will be covered? Let us see in the detailing part. So through the example, it will be easier for us to understand. So what it covers? So it covers generally those services where a person who is sitting at some remote location can help you perform that service. So I'll give you a simple example. Let us say you want to make a mix of 2 3 herbals which will become a herbal paste to be applied on your face. And for this, you require expert guidance of some Ayurveda Charya who will guide you, who will even train you, and who will tell you how this paste is to be properly made. Now, this Vedacharya stays in a remote place of Kerala. You may be staying, someone is in Canada, someone is from the US, someone is from the UK, etc. Now you all are connecting with this Vaidacharya who is in India in a remote location in Kerala through some electronic medium. So maybe through some internet, through some Zoom call, through some Cisco WebEx or any such medium, you are performing or you are connecting to this person, and through this electronic medium, this person is supplying the services. Again, the services are in relation to the goods, but here the goods are not made physically available to me. I am sitting in my place, but using this internet, I am providing the service and I am guiding you how to prepare this particular special paste. Similarly, let us say you want to prepare, you want to assemble something. Again, for that, I am connecting with you through some internet. I am having a dummy piece which I am over here assembling, repairing, and I am showing you how to do it. How each and every part has to be fixed, how it has to be molded, how it has to be welded. And looking at what I'm doing at my place, you are performing the same thing sitting at your place. This is another example of this type of service. So for such services, the place of supply shall be the place where the goods are. So if you see, clause A and proviso more or less are covering the same answer. The only difference is in clause A, the goods have to be physically made available to the supplier for performing the service. In case of clause B, the goods are not physically made available, only that the supplier sitting at his place, which is a remote location, is providing you the service using some electronic means. But one thing is common in both, that the services are to be performed on the goods. So they are in respect of the goods. Such cases, the place of supply is the location of the goods. Now they have carved out an exception to basically provide relief to our Indian exporters. Now, who are these Indian exporters? They are the one who are engaged in services of performing some intermediary process on goods which are sent from outside India to India, and these people are going to perform these intermediary process on the goods and send it back outside. Like, if you know that in case of diamonds, we get the rough diamonds from various mines of Africa, and they are being sent to India, to the Indian, what do you say, Karigir, that is the person who are expert in this, and they convert this raw, rough diamonds into a polished diamond, or at least they make it into a usable diamond. So this is one of the services which are being performed in India on rough or uncut diamonds. This is one of the very common examples. Similarly, for various other artworks, the raw material is sent to India and we perform those special artworks, we perform those special design works, and we send it back. Similarly, many times, since Indian labor is cheap and at the same time is very technically sound, many times many machineries, high-end machineries or very complicated electronic gadgets are repaired very efficiently by these people who are in India. And for all foreigners, it is cheaper also, because in their own country, either they do not find the properly skilled and trained people to do the work, or where they find they are very costly. Instead, they prefer sending their goods to India for carrying out this repair work. So for all these cases, when this second proviso was not there in this particular provision, it was creating a lot of problem for all these Indian artisans or Indian these experts, because whatever services they were performing, as per original clause A, the place of supply was place of performing the service, which was India, and it was not making these services eligible as export of service, and all the export benefits was not derived by the Indian suppliers. To overcome this second proviso was introduced. What it says: nothing contained in this clause shall apply in case of supply of services, where the services are supplied in respect of goods which are temporarily brought into India. So they've used the word imported, but import means we are not buying it, we are just bringing it into India. If you remember the definition of import export, nowhere the word sale, supply is used. So import export is defined only to physically bringing in into India. Now, why they are brought into India? Either for carrying out repairs or for any other treatment. Like I give example of multiple such treatments or processes. And after completion of this, they shall be resent back. So here we are not buying these goods. Our intention is not to consume these goods in India. These goods are temporarily coming into India for carrying out these works. And after such repairs, treatment, or processes being done, and without using the goods in India, they would be sent back. Then, in such cases, they are saying the place of supply will not be as per this clause. If the place of supply will not be as per this clause, then what would be the place of supply? So the place of supply, if it is not as per this clause, will go to the default clause, that is 13.2. And then the answer would be that where the recipient's location is known, the place of supply is the recipient's location. So because of this second proviso, all these specialized services which are performed where the goods are sent to India and they are sent back, the service will become export service. And because it will become export service, the place of supply will be outside India. It will become export, and all these Indian professionals or the Indian expert technicians will be eligible to enjoy the benefit of export of service, that is zero rated supply. So what does this proviso says? It says provided that nothing contained in this clause shall apply. So whatever you read above will not apply. The place of supply will be then as per the default provisions. The second thing which is covered in this subsection 3 is now services which are supplied to individuals. Again, how? Represented either as the recipient of service or a person acting on behalf of the recipient. Now, how it is provided? Which requires physical presence of the recipient or the person acting on his behalf with the supplier for the supplier of the service. So here again, similar to the services on goods, here now certain services has to be performed on the individual, on the human being. And again, it is such that the human being has to be present in India. Only then the service can be performed. Now, in this particular case, again, the place of supply would be the place where the services are being performed. That is, if let us say a foreigner is coming to India for getting some treatment done, then the place of supply of such services would be India. So this basically covers all the services like medical services, all the services like beauty treatment, personal grooming, wherever the physical presence of the recipient is required. In such cases, the place of supply will be the place where these services are performed. So what it says, services supplied to individual represented either as a recipient or a person acting on behalf of the recipient, which requires a physical presence of the recipient or the person acting on his behalf with the supplier for the supply of services. So for such cases, the place of supply would be the place where the services are actually performed. So if these people are coming to India for getting any of these services, the place of supply would be India. So this is what section 13.3b says. Here they have not yet carved out any exception to this. So all these services, the place of supply shall be India. Then we come to subsection 4. which deals again with the immobile related services. Again, a similar language is used. Place of supply of services which are supplied directly in relation to immobile property. So again, the same phrase which was used in 12.3 for domestic services is used over here. And again, it is saying it will also include services which are supplied by expert estate agents, supply of accommodation by hotel, guest house, campsite by whatever name called, grant of right to usable property, service for carrying out or coordination of construction, including of architects, interior, etc. The place of supply shall be the place where the immobile property is located or intended to be located. So the provisions are very similar to the place of supply, what we have determined in relation to domestic transaction, right? So it will be the location of immobile property. However, here something is interesting. What is that? Above services supplied at more than one location, including where one of the locations is India. So let us say these immobile properties are in different countries, and for all the countries, there is one single agreement. In such cases, if out of all the countries for which these services are to be provided, if one location is India, taxable territory means India, then for the entire service, we will consider the place of supply as India only. So if there is a single contract covering accommodation service at 5 different places, let us say these are the 5 most beautiful beach places, and one of them is India. In such a case, the place of supply for the entire contract will be India. Further, where the above services are to be supplied in more than one states, then each of the states. Again, for this, how the value to be apportioned? The value to be apportioned either as per the terms of the contract, and if there is nothing mentioned in the terms of the contract, then as per the rules. Now, for this, what they are saying, in the absence of contract or agreement between supply recipient, the proportionate value of services supplied in different states where the service is supplied is computed in accordance with Rule 8. So here you have to check Rule 8 of the IGST rules. Rule 8 lays down that in the absence of contract, the value is to be determined by apply provisions of Rule 4. So what we studied for domestic services, the same provision for apportionment is given for foreign services or international services. So Rule 8 says that in case the contract is silent as to how to apportion the value, you will apportion it using the same principles what we studied earlier for domestic services in Rule 4. So the provision for determining the proportionate value of services provided directly in relation to immobile property under 12.3, that is for domestic transaction, are applicable for determining the proportionate value of services directly in relation to immobile property under this section as well. So what Rule 4 provides, we have already studied earlier, so we are not going back to that. Now, coming to the next category of service. Now here, there is a deviation from what we studied earlier. In section 12, we had 2 separate sections. One for entry to an event, 2 for organizing of event. So there are 2 separate entries. One entry is for entry or admission to event, where in the domestic section 12.6, the place of supply was place where the event is held. And when it was organizing of an event, same event, the place of supply as per 12.7 was if the recipient is registered his location, if not, then the place of event. Now, I already mentioned that in section 13, the requirement of registered person is not there because it is not possible, it cannot be there. Hence, they have removed that proposition. Now, if you remove that proposition, what will be left is even for admission and for organization, for both, only there will be one answer. The place of supply will be place where event is held. Because now the registered recipient equation is out. So the place of supply, even for entry to event or for organizing an event, For both, the place of supply will be the place where event is held. Further, for services ancillary to such admission, the answer is same because that is a similar provision. If above services are supplied in more than one place and one of the locations is India. So let us say events are to be held in 10 different countries and one of the countries India. You have entered into a lump sum contract for a single price. Let us say it is organizing of A.R. Rahman sir's show in India, in US, in Australia, in France, in Germany, in let us say Thailand, and multiple such places, total 10 places. Now, for all these 10 places, the services of organizing this event has to be provided. This service contract is a lump sum contract for one single price of rupees 10 crore INR. In such cases, the place of supply for entire 10 crores will be India if one of the locations is in India. Now, if none of the location is in India, then what will happen? The rule is silent. Interestingly, it will be the place outside India only. And in that case, you have to apportion it using some reasonable basis. Ayush is asking, sir, why when India is included in any contract, the place of supply becomes India? Yes. Now, that is an interesting point to be understood. This same point was there in case of immovable property service also. And the same point is in exhibition service also, that if you are having a lump sum contract and in that contract one of the place is in India, then why for entire contract they are considering India as the location? See, again, there are two things, Ayush. One, what we are doing is we are following international guidelines. So first, whatever provisions we are making, the provision is basis international guidelines. Now, if you'll ask, "Yes, sir, but for international guidelines also, what is the basis?" I'll tell you. Try to link it with your income tax provisions of residential status and what is given in section 5 as to what will be the scope of taxation. Over there, if you remember, there is a concept in section 5 that is where the income is accrued or deemed to be accrued in India. The tax would be in India. Now, interestingly, in those cases also, if you find there is a resemblance to this point, what is the resemblance? Why those income tax provisions are also so designed that even if you are a non-resident and whatever you are doing is having no direct connection with India, but because it is deemed to accrue in India. So deemed is means actually it is not accruing in India. The law is presuming it is accruing in India. So even in income tax, we have this similar provision, or I should not say provision, but the similar logic flowing. What is that logic? The logic is all countries have collectively reached to one consensus that we will try to make the physical country as the country who should get the tax, both direct and indirect. But having said this, there is a possibility that a non-resident, let us say the person is from US, UK, has entered into contract with another person in US, UK for performing some event in India. Now, if the foreign countries are unable to track it, okay, I'll just change the example. Let us say the supplier is from US, UK, the recipient is a person from China, and the event has to be performed in India. In this particular case, you apply the income tax logic also, you apply this point of GST also. Why they are saying that where the one of the place is in India, you will take India as the location. Maybe a similar point will also exist in the respective country's taxation law also. So what they are trying to do is whenever it is international transaction, what is of prime importance is that there should be no tax evasion. It should not happen that I feel that okay, that country is getting taxed, so I will not tax, and that country feels that okay, the third country is going to tax, so I will not tax. So it should not happen that there is any scope of tax evasion. Keeping this in mind, even in income tax and even in indirect taxes, they have made such guidelines which allows each country to consider its country as the taxation point. And this is where then comes into picture the double tax avoidance agreement, which you will find in income tax. You have a specific chapter. In GST, we do not have a specific chapter for double tax avoidance agreements, but I'm sure that whenever different countries sign a bilateral trade agreement, like how very soon maybe Russia and US may be signing, many things would be in public domain and many things would be secret agreements, but they would be signing very soon in next 1 month's time. So in such agreements, one of the major para or the clause is about taxation. And in that, basically, they are talking about two things. One, where they want to give outright relief, like how we just signed the FTA, free trade agreement with the UK, and many more European countries we will be signing in next 2 to 3 months. One, it is for free trade. Two, it is for such scenarios where there are transactions which are being taxed in multiple countries. Then you sign a contract whereby mutually you agree on some common thing, like we will share it, or you will take the tax for this transaction, I will take the tax for this transaction. Then through those bilateral contracts, you override these provisions. But answering your question, why they have made such a provision, the answer is one, international guidelines. Two, international guidelines are designed in such a fashion that there should be no tax evasion. Like I'll tell you, presently what these international guidelines are working very rigorously on is provision of services through these online portals. The online portal concept is increasing day by day. We are finding that today, even in our houses, many of things we are buying using the online portals. It may be goods, it may be services. And knowingly or unknowingly, you may not be know that these online portals may be foreign online portals. And they may also be sourcing the goods from a foreign country. Recently, I placed an order through Mintra. I'm telling you my own scenario. I placed an order for different garments. All the remaining garments I received in 4 to 5 days max. But one of the garments is still yet to be received and it is now more than 25 days. When I checked with the app, I found that this garment is being shipped from UK and that is why it is going to take time. So from this, you can understand that I have casually selected something, ordered something sitting in my house, but I did not know that this particular commodity will be sourced from a foreign country. Now, in this particular case, there are such scenarios that the buyer is sitting in India, the app is of US, and the supplier is of UK. For such transactions, and see if it is goods, still at least there is custom where through custom barrier or through custom check, you or any one country will get a tax. But think of this as a service. If this type of service contract happens, and it is happening, where the recipient is in India, the app is of US, and the service provider may be sitting anywhere in the world. In such cases, how any country will get tax, both income tax and indirect tax, because it is very difficult to trace and track these transactions. So even today, the international bodies are still figuring it out how to tax such transactions. So this type of provisions you find in income tax and GST and parallelly in the respective countries income tax and GST, which has been incorporated with utmost caution so that such transactions which have any connection with your country, let me first bring it in my tax domain. And then maybe through bilateral trade agreements, I will, with my other partner countries, decide how to deal with the tax. One of them may waive the tax, or somebody may give rebate, or internally we may give exemption. That we'll decide later. But at least let me first bring it to tax so that it should not evade tax. So Ayush, this is the main reason why such type of provision has been made in the law. law. Fine. Yes. Anybody else has any question? Again, where such an event is held in more than one states and again under a single contract. What does it says? Firstly, as per the terms of contract, the value has to be apportioned because the place of supply will be every state. That is now clear. The place of supply is the place where the event is held. Now, if the event is being held in multiple states, every state should get their share. How? The value will be apportioned as per terms of contract. If the terms of contract are silent, then the value will be computed as per the rules. Again, Rule 9 of IGST rules is designed for this type of transaction, but there is no need to again define it because for similar transactions, for domestic transactions, they have already defined how to divide this in Rule 5. So the same provisions or the same point that you studied in Rule 5 will apply over here, mutatis mutandis. Now coming to something for which we will require a good interaction. Can somebody help me with reading the provisions?
Sir,
Yes. Yes.
could I read?
Yeah, please, beta.
Okay. Banking and financial services, intermediary services, and hiring of means of transport. Section
First,
13,
firstly,
subsection.
firstly, so what are these three different services covered? One is banking and financial, we understand it. But here, now when we'll go deeper, you'll find some very interesting facts in banking. Two, intermediary, which is the main discussion point. Three, now three is interestingly, it is not covering the GTA service or the passenger transport service that is covered separately. What it is covering is hiring of the means of transport. So let us say I am a GTA. For providing my GTA service, I need truck and truck is being provided to me on rent, on hire by Ayush. So the service between Ayush and the GTA, where Ayush is providing to the GTA means of transport. So please be clear, here the GTA service is not covered. It is the means of transport which is covered, right? Yes. Now you can go into details, Neha.
Nature of supply. Services supplied by a banking company or a financial institution or a non-banking financial company to account holders. See definition of these terms in explanation to subsection 8 of section 13.
So
Intermediary.
firstly, for accounting services, what they have said is, see, the place of supply is now interestingly, it is not the location of recipient, it is the location of supplier. Why? I'll explain that also. But firstly, for banking services, what they have said that the place of supply, sorry, not place of supply, for banking services, what they have added is where it is given to account holders. Now here, I'll just like to give you some comparison so that you'll appreciate and you will see what or how the provisions are designed. So let me take you to section 12 because we studied section 12 also. And in section 12 also, you had all these services, right? So this is section 12. In section 12 also, we had banking service. Now, interestingly, in section 12, yeah. Now, when you come to subsection 12, it is again dealing with banking. Same, the place of supply of banking and other financial services, including stockbroking, to any person. Now, see the difference. I'm not interested in what is the place of supply. That is okay that we are studying. But what is the difference is In domestic transactions, they have said for banking services which is given to any person. But for international transaction, when they are talking about banking or same financial institution service or non-banking financial company service, they are using the term to account holders. See the difference. Now you will say, sir, what is the difference? I'll give you a very simple example. Let us say I go to a bank. My bank is, let us say, State Bank of India. But I am traveling in a different city. I'm there for some professional work and I urgently need to draw a demand draft. I look for SBI, but in that location, I'm not finding SBI for some reason. So I find HDFC. I want to immediately issue a DD. So what I do is I go to HDFC, I give them the cash, and I get the DD made, which I have to give over there to some supplier. Now, in this particular case, this difference is important. When I'm getting this DD services from HDFC Bank, I'm not an account holder of the HDFC Bank. HDFC Bank is going to charge me some commission for this DD services, what every bank do. We all know there is a commission whenever you want NEFT, RTGS, or any type of such services done. Like same like demand draft, nowadays we do NEFT, RTGS. Now, in such cases, I am going to HDFC, which is not my bank. But since HDFC example is covered in section 12, the place of supply will still be determined by the same category of place of supply of banking and other financial services, because here the services provided by bank is important, not the person to whom the service provided is important. Whereas when you go to section 13, which is for international transactions, what they are saying, services supplied by a banking company, etc. And further they are saying to account holders. So here, this point becomes very, very, very important. Now we'll first discuss all the relevant explanations, etc. relating to banking. Then we'll come to intermediary, which is whole together a different concept and a very, very important concept in GST. So I just wanted you all to focus on this. I'll have to go to the So now when we are in the details of this, let us go to the explanation. Yes. Neha, where is this explanation which they have just mentioned?
Page number 375.
Page number?
3.75.
Acha, 3.75. See, 3.75 is what we are presently reading, na, Neha?
Oh.
See, here they have mentioned that for, see the definition of these terms in explanation.
Yes.
So I'm looking for this explanation, where it is.
Explanation to subsection 8.
This is what I'm looking for, so that we can go and discuss that explanation. Okay, Geet is saying it is on page number 3.63. Acha, so it is in the main provision. Understood, Geet. ठीक है. Okay, fine. So the explanation is here in the main provision itself. So we are studying section 13.8, which deals with services provided by a banking company, financial institution, non-banking to account holders. Now, what is this? Banking company, financial institution, and non-banking, we are not interested because they have said that definition will be as per the respective definitions of the RBI Act. So that is not of interest to me. What is of interest to me is account. Why? Because the section applies only where the service is given to account holders. Now, who will be called as account holders depend upon what is the definition of accounts. Please read, beta.
Sir, for the purpose of this subsection, the expression account means an account bearing interest to the depositor and includes a non-resident external account and a non-resident ordinary account.
Interesting. So, for the purpose of this particular section 13.8 service, we need to understand the meaning of the term account holder, for which they have defined the term account. Now, interestingly, what they are saying, account will mean an account which is bearing some interest. So, where my account is like a current account not bearing interest, it will not be considered in the definition of account for the purpose of this section. So what they are trying to say is we will include only those accounts where some interest is being provided. So by default, it will not cover the current type of accounts. And further, then it will include a non-resident external account and a non-resident ordinary account. So interestingly, for the purpose of the banking services under the international category, the specific requirement is that the place of supply will be the supplier of service location. So firstly, it is not the recipient location, it is the supplier of service location. But when? Only when the services are given to account holders. If the services are not given to account holders, then this will not apply. So this is what is the key point which I thought I would highlight to you all. Now we go to the next part in this, which is the biggest, I'll say, issue today. That is intermediary services. Now, intermediary services is a very big issue today. Why? Because of the definition of intermediary. Now, if I go to the definition of intermediary, you will find that today this definition has lot of dispute, lot of debate. Before that, here what is given? Services provided by an intermediary where location of both supplier and recipient of goods is outside India is made exempt by way of this notification. So that is fine. So this notification has exempted this. My interest is not this. My interest is the definition of intermediary, for which we come to the starting of this chapter, where all the definitions are given, because this intermediary is today creating a lot of issue. Now, again, for intermediary services, as per the section, what is the place of supply? So even for intermediary services, the place of supply is the location of supplier. But now the question is, what is intermediary? Let us understand. Yes, Neha. Definition of intermediary.
Intermediary means a broker, an agent, or any other person by whatever name called who arranges or facilitates the supply of goods or services or both or securities between two or more persons, but does not include a person who supplies such goods or services or both or securities on his own account. Section 2 subsection 13.
It is not subsection, it is clause. Whenever you are
Section
reading
2,
definition,
clause 13.
very good. So whenever you are reading definition, whenever you are reading definitions, you should not call it a subsection, it is a clause. Now, understand this definition, students, then I'll also give you reference to some very interesting litigation which is there in relation to intermediary. Firstly, what is the problem with intermediary? Why this definition and the litigation is so relevant today? Because for intermediary, the place of supply is the location of the supplier. This is where all the problem is. So let me first give you a real life example. Then you'll understand what this particular matter is. You are a German manufacturer of a specialized equipment or machinery. Now, your machines are very high-end machines and they are very super specialized. As you all know, Germany is very much famous for all such things. Now, you are exploring Indian markets. You want to supply your machines to India, but you do not know much about Indian buyers or Indian industries who would be buying your machine. So what you do is you appoint me. Now there is two possibilities. Either you appoint me as an agent or you appoint me as an intermediary. Now let me tell you one thing, students. There is a different definition of agent under GST law, which has a very specific meaning under GST. So when you are using the term agent, as per the definition under GST, it means something else. What that means, let me first explain that also. Here also you'll find the word agent is used, but that is not used in that meaning. So what is the specific meaning of agent given under the GST law? Agent under the GST law means that person where the principal will supply the goods to that person and then that person will supply the goods to the customer. So in other words, under the GST law, the specific requirement of agent is that the supply is to be routed through the person or the goods are first given to that person and then that person further transfers it to the customer. This is what is the concept meaning of agent under the GST law. So under GST law, agent will be only where the goods are flowing through him. Now there is another concept, like in our day-to-day businesses, we use agent for this person also, but we commonly use agent for another person. Who is this another agent? This person who we use the word as agent in our day-to-day business parlance is the one who is simply helping connect the buyer and the seller. That's it. Once he is able to connect buyer and the seller will directly send goods to the buyer. He will not send it through agent. So in our day-to-day business parlance, agent even means this person. In fact, majority times, this is the person whom we call as agent in our common business parlance. In GST, this second type of person, this second type of agent is what is called as an intermediary. See the definition again with this understanding. Now, understand this. If you now read this definition again, you'll understand which agent we are talking about. So here, the definition of intermediary is basically talking about this second type of agent whom we normally refer to as agent in our day-to-day parlance, in our business parlance. But in GST, this second type of person is what is referred to as intermediary. So see, what is intermediary? It means a broker agent. Now here broker agent means in the generic sense, not as per the definition of GST, or any other person by whatever name called, who arranges or facilitates the supply. Simple. Who is not involved himself, who is only connecting both the persons to facilitate the supply, to arrange the supply. Yes, Geet is saying something. GST agent definition that we read in chapter 1, supplies are received in capacity. Yes, that is what is the point, Geet. So when you read schedule 1, where the reference of agent is given and where, if you remember, as you rightly pointed out in chapter 1, when we discussed this, we went through certain circulars also. And in that they clarified who will be agent as per schedule 1, where the concept of principal and agent was used. So over there, it was clarified that agent would mainly mean under GST the person to whom the goods are sent first and then he will forward it to the customer. That is only when the supply is routed through the agent, that person is called as agent under GST. However, In our common parlance, that is not the case. But now let us talk from the GST parlance. Now in GST parlance, there are two persons. One is agent, one is intermediary. Intermediary is the one who is only connecting you all, who is only helping you all to do the supply, but he or she is himself, herself not getting involved in the supply. That is, he or she will not be getting the goods and forwarding it to you. So in our common parlance, we refer to such persons as agent, whom the GST law is referring to as intermediary. First. Now, once you have understood this, let us understand what is the issue. Coming back to my Germany example. So you are the German manufacturer. You have appointed me. Now, what is your understanding or contract with me? That I will be exploring markets for you in India. I will be identifying those industries, those businesses which will require your machines, and I will get orders for you and give the orders to you. That's it. Or I will give you the connects after meeting them, after identifying their requirements. I'll give it to you. Then you supply directly to that person. My involvement is not there. So I'm only helping you to make your supply, but I will not be involved in the supply. Then I become intermediary. Now the problem is, the moment you put me in the shoes of intermediary, and we are in international transaction where the supplier intermediary is in India, the recipient, the German manufacturer, is outside India. Problem is, whatever commission this German manufacturer will give me for my services, I will be getting in foreign country. This is advantage. This is not the problem. The problem is, this will not become export of service. Why not? Because for export of service, one of the major requirements is that the place of supply should be outside India. However, as per the provision which we are studying, 13.8, the place of supply for intermediary services is the place of supplier. So in short, it is becoming India. Now you'll understand what the problem with this provision is and what is the litigation or the issue. The problem is, because of this provision, all these agents who are acting as intermediaries are liable to pay 18% GST on their services. And this is hampering their business. Why? Either they have to pay this GST out of their pocket because they cannot recover it from a foreign this counterpart, and if they are trying to recover it from the counterpart, that is adding to their service bill, then maybe the counterpart is finding it difficult because my services are getting costly. So this is overall negatively impacting the business, negatively impacting the services, exports also for India. Now, this is where this definition is under lot of litigation. Now, recently, there was a judgment by the Honorable Bombay High Court in Dharmender M. Jani's case, where interestingly, originally, the original judgment was by a two-bench Honorable High Court. And when we say two-bench, it means there are two judges. Interestingly, in the original judgment, the judgment was total 180-degree opposite, because one judge said that yes, the place of supply should be as per 13.8 and the place of supply should be India, and hence it will be CGST, SGSTY, because the supplier and the place of supply are same. However, the other respected judge said, sorry, this is making an international transaction, a domestic transaction, which is outside law, which is outside constitution. So his part of the judgment, he said that section 13.8 is unconstitutional. Interesting. He said that the judgment, the section itself is unconstitutional, it should be struck down. Now, since for the same judgment, for the same court, there were two opposite views, the matter went to the Chief Justice of Bombay High Court, and the Honorable Chief Justice said that we cannot consider this entire provision to be ultra vires. So this provision will be there. It means the Honorable High Court Chief Justice said that the 13.8 provision which we are reading is constitutional, it is valid, but then he further added saying that, however, it cannot be CGST, SGST because the recipient is outside. So interestingly, the problem is that this section, because of the provisions that it is having, has created lot of confusion, lot of problem. Even the court has not given a clear answer. And that is where this particular intermediary concept, this intermediary definitions becomes very, very important. So please understand and appreciate, students, that this concept of intermediary is maybe in future we'll find some amendments, in future we'll find some explanation, clarification, because today this matter is pending with the courts as to whether your transaction is intermediary or it is not intermediary. Because this part is very wide. Who arranges or facilitates the supply of goods or service? I'll give you another example. Now, there are foreign universities who have appointed their agents. I'll use the word agent for the time being, but as per GST, it is intermediary. What is the role of the agent? To get them students. So what these agents do, they will canvass about the university between two different parents and students by maybe conducting programs in colleges or conducting some workshops or webinars or seminars where they will be canvassing about the university and getting admissions for the university. And once they are getting admissions, the university pays them some commission. Now, this particular type of service is very common. Today, we find that in multiple cities, you have this study abroad concept where you have certain centers where you can go and meet them and you want to go outside India to study. So they will guide you about which university is good, where to pursue your education, etc. Now, for these study abroad agents, this is becoming a very big challenge because of the wideness of this concept. See, understand one thing, what is the problem? The problem is that there is two types of business. One, where I'm working for you as your agent. Then, okay, you can call me as intermediary and you can make the services taxable under this. Two, where it is my own business to send students outside. Like I'm giving an example of study abroad type of all these centers where I am running this business where any student parent can come to me. The student parent will take guidance from me, and as per the requirement of student parents, I will guide them which is the best university. Maybe for that, I will be even informing about the present university. And since the student is going through my reference, the university may be paying me some fees. Now, in this particular case, the point is whether I have been appointed by the university as their agent. I believe no. It is my own business where I am providing this type of services. And this is where I believe there is a lot of dispute and there will be a lot of litigation in future for each service, that whether that service falls in intermediary. So this is whole background, students, about the issue of intermediary services. Reading it plain, the provision says the place of supply is the place where the supplier is. Yes, Neha, please tell me.
Sir, the services provided by the consultancy firms,
Yes,
where they should be included.
means.
The consultancy firms like
See, I believe it should be included in 13 to C. If it is not covering in any specific this, then we go to the generic rule. So this is what is the dispute. Ki whether it is covered in any specific or whether it will go to the generic. This is where the whole dispute is bit.
my question is that says consultancy firms are the intermediary or they are the agent. They are providing the job opportunities or they are hiring for the firms. They are intermediary or they are acting on behalf of the firms. They are the agent.
See, firstly, they cannot be agent as per the definition of agent under GST law. Why? What is the specific definition of agent under the GST law? That the supplier will provide me the goods or service and I will provide it to you. Now, none of these agents are doing that. They are taking the education and giving it to you, right? So as per the pure definition of agent, none of these will fall in the agent as per the definition of agent under the GST law. Maximum, either they can be intermediary under the GST law or they will not be intermediary, but they cannot be agent when it comes to such type of education services. Are you getting my point?
Yes, yes.
Because as we already discussed, that is why I first came to the difference between agent and intermediary. So agent is where good service are received by agent and they are forwarding it. But this is what we are not doing. I am not receiving education and giving it to you. I am only giving you the guidance as to which university you can go. Let us say you want to do medical and you did not get a seat in India. Now you want to still pursue medical, so you come to me seeking that, okay, where in which foreign university I can go and take the medical degree. So that is where my role of advisory or consultancy comes into the picture. But I am never an agent. Why? Because I am not receiving the good service and giving it to you. Understand this, correct?
Yes, sir.
So either I will be intermediary if I fit into that definition. This is what is the argument. This is what is the whole dispute. Because wherever I am getting any money from the foreign, they are putting me in intermediary, the GST department. Why they are putting me in intermediary? Because by putting me in intermediary, the place of supply becomes India. It will not be export of service and there will be tax that they are going to get. So this is what is the whole dispute, what I am talking about. Are you getting this?
Yes, sir.
So students, this is what is the whole issue, what is the whole point about intermediary. Let me take you to the detailing part. Achha, in detailing part, they have not given much, anything. Okay, we'll again take a break, students. Now maybe a break of 10 minutes, and then we will rejoin and complete the remaining provisions. Fine?
सर अभी एजेंट गुड्स तो है वो है ना नहीं एजेंट को दे सकते हैं और एजेंट है ना नहीं सप्लायर को सप्लाई कर सकता है, लेकिन
ओके, करेक्ट।
सर्विसेज कैसे है ना नहीं एजेंट को दे के एजेंट है वो सप्लाई करेगा सर।
नहीं
सर
होता
ऐसा
है,
कोई
इसीलिए अगर
है?
आप शेड्यूल 1 देखोगे तो शेड्यूल 1 में भी जो एजेंट वाला पॉइंट बनाया है दैट इज स्पेसिफिकली फॉर गुड्स.
हाँ
That is why if
तो
you see even in the definition or sorry the schedule 1 provisions they have specifically talked about supply of goods not of service. So you're right.
तो सर्विसेज मोस्टली सब लोग इंटरमीडिएटरी होगी.
There is no other option.
यस
इसीलिए तो सबसे ज्यादा इशू भी इंटरमीडियरी वाला प्रोविजन सर्विस में ही है, क्योंकि
हाँ
सर्विस में देयर कैन नॉट बी एजेंट.
हाँ
करेक्ट.
यस सर. यस सर.
करेक्ट. That is what is the issue. That is what is the point. You're right. Right.
यस सर.
Okay. Yes, Neha. Subsection 10 and 11.
Subsection 10 and 11. 1 minute, sir.
Sure.
Subsection 10. The place of supply in respect of passenger transportation services shall be in the place where the passenger embarks on the conveyance for a continuous journey.
So same thing what we studied in section 12 also for passenger transportation. Now again there were two provisions. One, if the passenger is registered. I already mentioned registered is not possible in 13, so that entire category is wiped out. So the second part was where the passenger is unregistered, and here it would be unregistered only. So the place of embarking. Now again important is when we talk about this section 13, what is the example? Let us say I want to travel to France. So the tickets which I'm booking, one possibility, I book flight in some Indian airlines. Second possibility, I have booked the flight or my ticket with some foreign airline. So let us say it is British Airways, whose flight is I find most convenient because it is the shortest distance and it is with least layovers that I'm getting a flight from India to France. Now, since I'm booking my ticket on a British flight or a British Airways, now Section 13 will trigger. What will be the place of supply? The place of supply will be the place where I embark, that is, I take up the plane, or in simple words, from where the transportation starts. And then they are saying for a continuous journey. Why they have used this term? Because generally, in case of foreign travels, many times the journey is broken into parts. Why it is broken? Because many times you may not find a single plane also going to that destination because of the distance involved. So either the same plane will go with layovers at 2-3 places, or that plane will take you to, let us say, Dubai. Dubai, you will have a layover and you will go to France through another plane which will start from Dubai. Now, in this case, the question is if I am first going to Dubai, disembarking over there, and from Dubai, I'll be taking another plane, then the question is what will be the meaning of this continuous journey? So, for this, again, we go back to the starting part of this chapter where the definitions were given, and in that, you are having the definition of continuous journey. Neha, please read. Neha.
Sorry. Continuous journey means a journey for which a single or more than one ticket or invoice is issued at the same time, either by single supplier of service or through an agent acting on behalf of more than one supplier of service, and which involves no stopover between any of the legs of the journey for which one or more separate tickets or invoices are issued. Explanation: for the purpose of this clause, the term stopover means a place where a passenger can disma- disembark either to transfer to another conveyance or break his journey for a certain period in order to resume it at a later point of time. Section 2, Clause 3. The term conveyance has been defined in Section 2, 2 Clause 34 of the CGST Act to include a vessel, an aircraft, and a vehicle.
Okay. So what it is trying to say is, now this provision says place of supply is place where the passenger embarks the plane, embarks that conveyance. So here we are taking example of plane, but then it puts a condition that it should be for a continuous journey. So where he embarks the plane for a continuous journey. Now in my example, I said that the plane which I am, or the route which I am taking is from here, it is taking me to Dubai. Dubai, I have a layover, and from Dubai, I'll be taking another flight to France. Now, in this case, the question is whether this is continuous journey. If yes, the place of supply for both the tickets would be India. But if it is not a continuous journey, then there will be two places of supplies. First, from India to Dubai, it will be India, and then from Dubai to France, it will be Dubai. This is where the definition of continuous journey becomes important. So with this example in mind, let us go back to the definition. So what it says means a journey for which a single or more than one ticket or invoice is issued at the same time. So I'm fitting in this. Two tickets are given to me. One India to Dubai and then Dubai to France, either by a single supplier of service or through agent acting on behalf of more than one supplier of service. So there could be more than one supplier of service. Why? Because from here I'm going to Dubai by British Airways, and from Dubai further I'm going by Lufthansa, which is again a foreign airlines. Now the most important part. So first entire part of definition is satisfied, that there could be one or more than one tickets, and it could be either by the same supplier or through agent acting on behalf of more than one supplier. So here I have an agent who booked my tickets, one up to Dubai and second from Dubai to France. Now the most important point, when it will be called as a continuous journey, where there is no stopover between any legs of the journey for which one or more separate tickets or invoices are involved. So they are saying it will be a continuous journey only when there is no stopover between different legs. What are the different legs? My India to Dubai is one leg and Dubai to France is the other leg. Now in between this, there should be no stopover. If there is a stopover, then it will not be considered as a continuous journey. Now what is stopover? They have even explained that. So for the purpose of this clause, stopover will mean a place where the passenger can disembark, either to transfer to another plane or to break his journey for a certain period. Now, interestingly, what is this? So there are two possibilities. One, I have taken the British Airways plane, which will take me to Dubai. But in Dubai, I will be seated in the same plane. The plane is having a break, a layover. Why? Because people are getting down at Dubai, more people are getting in at Dubai, and then the same plane is going to France. If that is the case, the definition of continuous journey is satisfied because there is no stopover. But in my original example, I am getting down at Dubai, I am having a break, maybe of some hours. It may be also a few days. Why? Because I think that, okay, directly traveling to France, such a long journey, I'll do one thing, I'll stop over at Dubai, I'll take 2 days break, I'll do some work, or I'll travel in Dubai, enjoy there, and then I'll go to France. In such cases, either when I am disembarking or I am breaking the journey for some period of time, both these are coming in the definition of stopover. And in my original example, there is a stopover. Why? Because I'm disembarking to transfer to another plane. Now, since I'm disembarking this plane, so that I can take up another plane, maybe without having a break of 2 days, I will be there on the airport only for few hours, and from there I'll be taking another plane. In that case, this is not a continuous journey, and I will have two place of supplies. For first flight India to Dubai, it will be India. Then from Dubai to France, it will be Dubai. So this is where this definition of continuous journey becomes important. Yes. Next subsection, Beda.
Subsection 11. The place of supply of services provided on board a conveyance during the course of a passenger transport operation, including services intended to be wholly or substantially consumed while on board, shall be the first scheduled point of departure of that conveyance for the journey.
So this is same like your section 12 provisions. So where any service is purchased by me on board the conveyance. When it is on board the conveyance, the place of supply for such services which is purchased or consumed by me when I am in the journey, the place of supply is the first schedule point of departure. So what we discuss in section 12 shall apply over here. Now, what is very interesting to note is one provision is missing. How? See, we had section 13 subsection 8, and then we directly have 13 subsection 10. What is missing is 13 subsection 9. What is this 39 dealing with, which is missing? 39 is dealing with GTA service. Now, originally there was 39 here. However, recently, in last year only, this section has been deleted. Means what? So GTA service first was a specific entry over here in 39, having a specific place of supply provision. Now it is deleted. Once it is deleted, it is getting merged in 13.2. So now for GTA, the provisions of 13.2 shall apply. That is the default rule or the residuary rule. However, prior to that, we had a separate section 13.9, which was providing that the place of supply for GTA service. Now, with GTA service, where one of the parties is India, one is outside India. So let us say I am in India, I have my business, and I want goods transported from Nepal to India. And for this, I have hired a GTA from Nepal. Now, in this case, since the service provider GTA is outside India and the recipient of service, that is me, is inside India, we apply section 13. In 13, the subsection was subsection 9, where the place of supply was the destination of the goods. Now, this provision has been removed and they have merged it with 13.2. So now place of supply will be the recipient's location on record. If not, then it will be supplier's location. Now we come to again a very interesting, very important concept, that is place of supply of OIDAR services. OIDAR is Online Information Database Access or Retrieval Services. Again, we have to first understand what is OIDAR. So let us go back to the definition of OIDAR. Yes. So firstly, what is OIDAR? We'll understand this, and then we'll go to the specific provision relating to the place of supply of OIDAR. Yes, Neha, please read the definition of OIDAR.
Online information and database access or retrieval services means services whose delivery is mediated by information technology over the internet or an electronic network, and the nature of which renders their supply impossible to ensure in the absence of the information technology, and includes electronic services such as advertising on the internet, providing cloud services, provisions of ebook, movie, music, software, and other intangibles through telecommunication networks or internet, providing data or information, retrieval or otherwise. to any person in electronic form through a computer network. Online supplies of digital content, movies, television shows, music, and the like, digital data storage, and online gaming. Section 2,
Okay,
Clause 17.
perfect. So what it says, firstly, what is OIDAR service? Now they have firstly given some examples as to what would be included in OIDAR services. So we read out this list. I'll give you the most simple example. Today, whatever OTT platforms we have in the form of Netflix, in the form of Geo Hotstar or Prime or whatever other channels are there, or now many of the channels which we were watching on television have also their presence on the internet. Like you have the Aaj Tak, you have the Z News, you have the Z Business, you have Sony Live. So all these channels, plus you have the OTT platforms, all these are now available online. First example. Second example is you have Google, you have YouTube, you have the Geo Savan music app, you have the various online portals on which you subscribe by making some monthly subscription, and then monthly they provide you some legal updates. Like we as professionals have subscribed to various multiple online platforms where against this subscription fees we are either able to access all these legal updates or amendments, or they provide us their synopsis and analysis. Now, all these examples, which we are today very much commonly using day in, day out, has become OIDAR. What is not OIDAR, let me also tell you, because again, that we are using day in, day out. All these online apps through which you are making purchases, either of goods or of services, are not OIDAR. So all your Mintra, Make My Trip, all these are not OIDARs. They are e-commerce operators. So for them, there is a different terminology point, that is e-commerce operator. Now, firstly, what is the difference between the two? E-commerce operator is again like an agent. He is connecting you to the supplier. He is helping you buy some goods or services through that portal. So all your Ola, Uber app, all these are Shadi.com, all these apps are e-commerce operator apps. However, OIDAR is such a platform online like Google, like your any music app or your YouTube, where the content is there and you are doing what? You are accessing or retrieving the data from these apps. Now, these are all online apps, either providing some information or some data. And through these apps, you are accessing or retrieving the data. The data can be in the form of content like movies, like songs. The data can be in the form of some magazines, in the form of some articles. Like nowadays you have these news apps also, where instead of getting the physical newspaper, you subscribe to them and they will give you the e-newspaper or regular e-updates. Similarly, there are other online services, like here they have given example of advertisement. Nowadays this is very common on all these free platforms, Facebook, YouTube, where you are accessing the data free. Technically, they are not the supplier. Why? Because there is no consideration, and we know for supply there has to be consideration. So what they are giving is free to you. So there is no charge for YouTube and Facebook. But by giving you free, what they are getting is the more and more you are accessing their data. Maybe you are watching different videos or different shorts on these platforms. These platforms have footfalls in millions and billions, where then different businesses come to these platforms and put ads. So like when you open YouTube, and before the video plays whatever you have selected, at the start or in between the video, after a specific gap, you find certain ads being auto-played. And in fact, you can skip the video or you can fast forward the video, but you cannot skip or fast forward these ads. You have to completely uh, watch the ads until and unless they give you the skip option. So the point is that all these advertisements service which these online platform providers are giving to businesses. Second, we get cloud services where we can store our data, or we get all these ebooks, movies, etc. Or like through Google, you are getting data information. Okay, Google may not fit here because it is giving you free, but as I said, now you are having paid platforms. Like we professionals have different platforms, different tax platforms, different law platforms, from where on subscription basis we are getting or using their data information, which is obviously in electronic form. So all this digital content is provided by some app, by some online platform, and then that app or online platform is what is the OIDAR. So what is OIDAR? Is that platform. What is the OIDAR service? It means the service whose, now interestingly, how the law has defined OIDAR services is where, so they have put the condition how these services will be provided. So what they are saying, whose delivery, that is the service, is delivered to you only by way of information technology over the internet. And most important, what they are saying is the supply would be impossible in the absence of information technology. So where you are getting any of these services like the digital content, the movie, the music, or you are getting some digital ebooks or something which you are referring to, you are getting that information data by visiting that newspaper website or by visiting that website where you have given subscription, made subscription, so that you are able to access their content, which you can read, which you can maybe download at times. This is mediated through information technology, and it would be impossible without this information technology. Then whatever data in any of these forms is provided to you is OIDAR service. Now understand this. No such data is provided to you by Mintra, by this Make My Trip. In fact, you are going there to buy something else. So these apps are only connecting apps. So they are not OIDAR. Please differentiate, because we are using multiple platforms online, but all platforms are not providing OIDAR service. I hope that is clear. Now, for such OIDAR services, what will be the place of supply? So let us first take a practical example. Now, if I'm not wrong, YouTube, one we use which regularly is free, but YouTube also has a premium option where by subscribing to that premium option, one, either you are able to access certain contents which are not available free on YouTube, which are available only with the premium subscription, or because of subscribing, you will be able to watch the same content which is there on the free YouTube also, but here you will be able to watch it without any ads. So that is what is the YouTube Premium. So let us say you subscribe to YouTube Premium, one. Second, you have subscribed to Netflix. Third, what we have done, subscribe to certain tax or law related app, which is providing you the updates, the analysis, etc. So all these three are examples of OIDAR. Now let us say these apps, YouTube and this Netflix, and also the app, the taxation or legal app, which I have subscribed to, let us say all these are foreign apps. So section 13 comes into the picture, where the supplier is outside India and the recipient who is subscribing to these platforms or apps is a person from India. So now as per section 13, what will be the place of supply? So firstly, I hope you all understood what services are OIDAR, because firstly that is important to be understood before we can understand place of supply. Yes, Neha Beda, please read.
Clause 12. The place of supply of online information and database access or retrieval services shall be the location of the recipient of services. Explanation. For the purpose of this subsection, person receiving such services shall be deemed to be located in the taxable territory if any two of the following non-contradictory conditions are satisfied, namely A.
Okay. So firstly, the provision says the place of supply for OIDAR service is the location of recipient. Fine. But interestingly, they have tried to define where is this location. Now, why this explanation part becomes important? Because we are talking about an online service. The definition itself says what we just saw, that what will be OIDAR, which is delivered through some information technology, using information technology, and it would be impossible without information technology. Now, since this is something which is online, the physical location of recipient is very difficult. So let us say, again, same example. I have subscribed to these three apps, which I gave you example, YouTube Premium, Netflix, and one online journal app, which is giving me some legal updates. All are foreign apps. I have my registered location in Mumbai. As per the definition of location of recipient, my registered location is Mumbai. But that may not be the location of recipient which they are talking here. Why? Because importantly, when I'm consuming some online data, this online data may be consumed by me firstly for my personal use, like maybe for my entertainment. Still, it is taxable, but it is being consumed for personal use. Two, I may be consuming it when I am traveling anywhere in the world. Now, if let us say I have subscribed to a particular app while I am on my trip to China, in this particular case, the question will be what will be the location of recipient? So, for the purpose of clarifying this, what they have said that the location of recipient will be India. Taxable territory means India. So they will consider the location as India. Firstly, they are only concerned if the location is India. If the location is outside India, taxation is not concerned. Why? Anyways, the service provider is outside India. And if the location of recipient is also outside India, they are not interested in the taxation at all. So here they are talking specifically that the location will be deemed to be India. And if it is deemed to be India and it is fitting in the requirements, then only India can tax. Otherwise, India cannot tax in the first place. So we are least concerned. Now, when it will be deemed to be India, if any two of the following non-contradictory conditions are satisfied. So now here they have given about 7-8 pointers. They are saying any two of these should fall in India, then the location of recipient will be India and the tax will come to India. If any of these two things are not in India, it means they are all are outside, or only one is in India but remaining all are outside, then it will not be India again. Because for being in India, at least two of these locations should be in India, or two of these conditions should be satisfied in India. I hope this is clear. Read these conditions. What are they?
A. The location of address presented by the recipient of services through internet is in the taxable territory.
How important. Now, this may not be possible when you are subscribing to Netflix, because Netflix, when you are subscribing, you are not giving location. Nobody is asking your location at times. You are simply scanning the QR code which is appearing, or you are simply going through the Netflix app and putting in your basic details. So, if location of address presented by the recipient is not there, like many times in case of many of these apps, they are not asking you your address, then maybe a point will not apply. But when I'm subscribing to some online journal, many times over there, their form requires me to fill in the data. Now, address again need not be your complete address. Even if they are asking you the country and the state, that itself is sufficient, because we want to identify whether this location is in India. So my detailed address, my PIN, postal address is not required. Even if the app is taking my basic details of like state and maybe city also and country, that is sufficient to satisfy first condition. So if falling in India, the first condition is satisfied. Second, Neha.
Yes, sir. B. The credit card or debit card or store value card or charge card or smart card or any other card by which the recipient of services settles payment has been issued in the taxable territory.
So second, the card through which I'm going to make payment, because majority of times these online subscriptions have to be paid through card only. Very soon you'll have UPI and all, once other countries start using UPI for all these payments. Otherwise, presently it is through cards only. Now, if any cards are used, then the card should have been issued to me in taxable territory. It means I should have taken the card from any bank which is in India. Third,
C. The billing address of the recipient of services is in the taxable territory.
fine. Fourth,
D. The Internet protocol address of the device used by the recipient of services is in the taxable territory.
now interesting. Since we are taking online services, these online services would be taken using some device which may be either your mobile or your tab or your laptop. Now, interestingly, what is this? This is in short called as IP address. Many times, if you watch any of these movies which are dealing with online frauds or any type of these uh, movies where there is war between different countries or movies on spy agents, you will find this term being used a lot, that is IP address. So what is IP address? It is a type of code or a identification number of your device. So whenever you are making a phone call, they try to identify, firstly, one is your location, that is through the internet and Google location. And second is, if you have sent a message or something, from which device this message is sent. Or let us say you are uploading, downloading something, and tomorrow some forensic investigation is going on. They try to find out from which IP address this particular thing was uploaded. Like many times on internet, if some anti-social, anti-national videos, hate speeches are uploaded, the government tries to identify through IP address who had done this. So IP address is that link or that identification of your device. So it is, let us say, a device number which is given so that that device can be identified from where that particular online or internet activity has happened. So again, here, whenever we subscribe for any of these platforms like Netflix or anything, we subscribe it on a particular device. Sometimes these apps have one or two devices option. Sometimes they only have one device as option, and these apps will run only in that one single device. So in that case, what is the IP address of the device? So basically, they want that any of these physical location should fall in India, so that we can identify that, okay, the recipient is sitting in India and the recipient has booked this service. So one, your address should be of India, your credit card, debit card should be of India, your billing should be in India, or your device is registered in India with the IP address of India. Yes, further beta, point 5.
E. The bank of the recipient of services in which the account used for the payment is maintained is in the taxable territory.
So when you are using e-banking facility, so instead of card, if you are using e-banking, then again, the address of your bank, if it is in India or the account is in India or in the Indian branch of that bank, then E condition will be satisfied. F.
F. The country code of the subscriber identity module card used by the recipient of the services is of taxable territory.
So many times when you are getting the subscription in the form of some cards and you have to fill in the card details and you can start using that service. So the country code of that card, if that is India, again the condition is satisfied. Next.
G. The location of the fixed landline through which the service is received by the recipient is in the taxable territory.
So let us say you are receiving this services through broadband, and this broadband, obviously you all know, is routed through some fixed telecom line. So if that telecom line is again in India, again this condition is satisfied. So these are the different identifications that they have given through which they will identify whether the service recipient has any Indian connection. And they are saying you have to satisfy any two of these conditions. If two of these conditions are satisfied, that is, any of these two addresses or locations are of India, they will treat this service as being provided in India, and the location of recipient will be the place of supply, which will be India. In such case, the tax would be applicable. Right? Now going to the last provision. Please read.
13. In order to prevent double taxation or non taxation of the supply of a service, or for the uniform application of rules, the government shall have the power to notify any description of the services or circumstances in which the place of supply
Sorry. Yeah.
shall be the place of effective use and enjoyment of a service.
So what does subsection 13 says? As I was also mentioning earlier, answering Ayush questions, that many times it is important to ensure that there is no scope of non-taxation, that it should not escape taxation. Hence, certain provisions are made. Now, subsection 13 is a generic provision aiming to that only. One, to prevent double taxation or to prevent non-taxation. What the government can do, the government can notify that for certain services, the place of supply will be taken on the basis of their effective use and enjoyment. Obviously, the government of India will say that if this is happening, we will consider that the effective enjoyment of the service is in India, hence the place of supply is in India. So 13 gives powers to the government to notify for certain services what would be the effective place of enjoyment. And if that effective place of enjoyment is in India, so automatically the service will be in India. Now, what falls into this? Let us go through those notifications which are presently issued under subsection 13.
Sir, page number 3.77.
Acha, 77 is this one. Yes. So under this 13.3, the notified services are this. Mainly, it is the R&D services relating to pharmaceutical sector. So what is this service? So presently the service which is notified under 13.3 is R&D services, but only relating to your pharmaceutical sectors. Like during COVID, we all know that India produced vaccines for the world, but that was supply of goods. When you're supplying vaccines, that is supply of goods. Then what is this? Let us say the vaccine development is done in Indian laboratories. And after development of the vaccine, we are not supplying the vaccine, but we are giving the formula to the world. So what we are giving is we are giving our R&D services. So one, we are sharing the formula with the world. So one is what we did actually was we directly produced the vaccines and supplied them to many countries, and many of them which were poor countries or underdeveloped countries, we supplied them free of cost. That was supply of goods. But in some cases, what we do is we, like in case of Russia, we hear there is transfer of technology. What is this transfer of technology? That is the R&D services. So what they have developed now, they will be sharing with India. But that is more in the defense sector and the uh, development of your fighter planes. That is with relation to Russia. Here, what is covered in 13.3 notification is services relating to the medical sector. So as I'm giving example, let us say some vaccine formula is developed by Indian laboratory, and that vaccine formula is given to the world or to different foreign pharmaceutical companies who would be using your formula to make and sell their medicines. In such a case, this particular service will fall in R&D service. Now for this service, what does the notification says? Please read, Beda.
The following research and development services related to the pharmaceutical sector as specified in column 2 and column 3 from SI number serial number 1 to 10 of the table given below when supplied by a person located in taxable territory to a person located in the non taxable territory have been notified as the services for which the place of supply shall be the place of effective use and enjoyment of a service as specified in the corresponding entry in column 4 of the table given below.
So now in this whole table, basically they have covered the R&D services. However, they have tried to break the R&D services into different aspects like integrated discovery and development, or it may be only development, or it may be evaluation of efficacy of a new chemical or biological entity in animal model or of disease, evaluation of biological activity of a novel chemical or biological entities in in vitro assays, drug metabolism and pharmacokinetics of new chemical entities, and so on. So what they have done is they have broken up the R&D services into different aspects. So it is not necessarily that only you are developing a new medicine. Even if you are doing some trial runs, even if you are doing some testing, all these things they want to cover. Now in this, what is very important is what this particular whole category aims at is where the supplier is in India. So it means these laboratories which are doing this research or testing or analysis is in India, and the recipient is a pharmaceutical company in a foreign country. So where the recipient is a pharmaceutical company located outside India, and they have hired our Indian laboratories or Indian research institutes to carry out research, testing, analysis, and give them the results, which may be either in the form of test reports or which may be in the form of these analysis reports or some reports relating to what is the impact of a certain chemical or a medicine on different humans and animals. When all these types of services are given, they are covered under this particular notification, and where the notification says that what has been notified that for these services the place of supply will be the place of effective use and enjoyment. Now they are saying that this is mentioned in column 4, that is the last column. Basically the last column says only one thing: it is nothing but the location of the pharmaceutical companies which is outside India. So simply they are saying that when these services are provided by Indian research entities to foreign pharmaceutical companies, the place of supply will be the effective enjoyment, which in simple words is the location of these pharmaceutical companies that is outside India. What is the purpose? The purpose is to make all these services export services so that our R&D industry also booms. Our R&D services can be exported to the world, and since these will become export, they will enjoy refunds, they will enjoy all types of export subsidies and incentives, so that they will get a better chance of competing with our foreign counterparts. So in this entire notification, basically they have made our R&D services export services by giving the place of supply as outside India, that is to all these pharmaceutical companies. Then the second is B2B MRO services of aircraft engine components. So what is this? This is supply of maintenance, repairs or overhaul services referred to as MRO. So MRO is maintenance, repairs, overhaul. Again, as I was mentioning some time back when we were discussing the 13.2 and 13.3, that many times Indian engineers, Indian technicians are very much preferred outside India. One reason, Indian labor is cheap as compared to foreign labor, and two, because of our in-depth technical knowledge. Now for these things, whenever any of these machines are coming to India for the repairs, maintenance, overhauling, what they have clarified, the place of supply is the location of recipient. Again, the purpose is when any of these ships or aircrafts are coming to India for the purpose of maintenance, repairs, overhauling, the place of supply should be outside India. So that our R&D services can be exported to the world, and since these will become export, they will enjoy refunds, they will enjoy all types of export subsidies and incentives, so that they will get a better chance of competing with our foreign counterparts. So in this entire notification, basically they have made our R&D services export services by giving the place of supply as outside India, so that it becomes export of services. And then there are different clarifications relating to what we discuss, specifically dealing with some of the above services. I request that you all kindly go through these clarifications so that in case there are any doubts, we can discuss it in the next class. So with this, we conclude our today's class. Just a simple request, kindly go through all these clarifications. These are very specific one-to-one related clarifications dealing with a particular service. But I request that you all go through them so that these, if by chance asked in the exams, you are prepared with what is given. And then in the next class, we will take up this section 7, which deals with the definition of interstate supply. Fine, students? So I think with this, we conclude today's session. Ayush is saying, so if R&D is completed, including completion of trials, why would it is completed, so it will not be included? It will be included in this. This notification is in fact extending the scope of R&D, that it need not be the complete R&D only. It can only also be small parts. See, the first 2 points in the notification are for complete R&D, and then the further pointers are for some small aspects in the entire R&D process. So Ayush, it need not be complete R&D. It can be also parts and even the complete R&D. Both are covered in the same notification. So that is all from my side, students. I hope all the technical points which we discussed, they were today more technical than the other session, but I'm sure you would have understood them. Again, the same point, please go through the entire chapter. Go through each and every part in the chapter. This chapter is very relevant for your GST practice if you get into that. And also, this chapter has a lot of relevance in exams. So with this, thank you very much for today. Let us meet again in the next class with clarification on this chapter if any doubt is there, and with the next part, the next topic, so that we can proceed with our syllabus as scheduled. So thank you all. Have a good day. And please
Thank you, sir.
Thank
Having
you.
a fantastic day.
Same. Session over, Ashok ji.